The only reason prices go down is because the people who are selling are more passionate to sell than the people who are buying. You feel me? No, it's no more complicated than that. Everything else is like a storyline. And so what we see in today is that the general sentiment is that there's a large number of people who are really passionate about selling right now. And now you can debate the reasons why. You could debate 100 reasons why. But at the end of the day, the most simple way of explaining it is that there's way more people who are feeling like anxiety about holding on to these. And they're like, I got to sell this. This might be the last chance I could sell this for this much. Tomorrow, I think it's going to be worth less money. So let me sell it here before it goes to zero. That's why markets crash. Does that make sense?
That makes sense.
Well, so now if you've done your homework, you know what I'm saying? You can look at it and you can take the other side of that bet. And you can say, well, I know people mentally, they're borrowing their conviction from YouTube or something like that. They're listening to me and they're trying to make their decisions on what they should do. And so if you are studied up and you have an idea of what something will be worth down the road and you think right now it's at a discount, then you scoop those up. You know what I'm saying? You take advantage of the psychology of the market because all humans are prone to the same things, right? We're all emotional. Money is emotional. And when you see those numbers turn red, see, like, I don't even like, if I use charts, let me pull up a chart for you just so I can illustrate. And then I swear I'll give up the mic because I've been going hard in the paint.
I actually have a question for you that goes with this. Like when we're in a bear,
yeah,
and say you may not be as educated, and you can always go do your own research and read articles as to why these things are happening. But you hear everybody saying like, oh, I think Bitcoin's going to touch this price or whatever. When things are going down like this, how do you know? Like, what gives you an indication of now is the time to possibly jump in and catch this wave on the way back up?
Yo, look, I'm gonna give you this game right here. You can see my screen still?
Yeah.
Sure.
So, there's this website. It's called Visual Capitalist. It has this chart. This chart is from 2021. And it shows every time, and since then it's dropped multiple times, but it shows every time that Bitcoin has dropped by over 30% since its inception. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And that was only up until around this time a year ago. And so it's had, I believe, 2 or 3 more drops of like 30+% since then. It's dropped 25% since the beginning of the year. So looking at the asset that you're talking about, you first have to understand, like, what is the timeline that I'm looking at for this? If I look at this chart, which is a Bitcoin chart on a 1 year, it's pretty much flat. You feel me? Like it's got some peaks and valleys to it, but it's pretty much flat over the course of a year.
Yeah.
But are you planning on holding this investment for 1 year? That's the question you have to ask yourself. If not, then you have to start extending that time frame and start looking at it over a longer time frame, because assets behave differently when they have a longer time to mature in your portfolio. And so this is the reason why a lot of people suck at trading and it's easier to be good at investing, is because in investing, what happens on any one of these single days is irrelevant, because the general trend, like a 5-year-old could read this chart. Is this chart going up and to the right, or is it going down and to the right? It's going up. But it's because you got to look at the bottom here. These are measured in years. So when you start zooming in and measuring it in months or measuring it in days, then it becomes hard to decipher like what's really happening here. And so you really have to look at your time horizon. Okay. And back to my last point, when I was saying like the bid and the ask, or the bid and the offer, when you see the price listed of an asset right here, you can see it's called the last price. The reason why it's called the last price and the reason why it's always changing is because that's the last trade that went through. So the very last time that somebody bought this asset, that was a price that they agreed on. That's when the bid and the ask crossed over. And then it happens again every second. There's another trade going through, and that's why the last price is adjusting. So the price that's quoted, it often it's only a number that is going to be there for a second, because more people are active trading. And if there's less people trading, that means there's less bids and less offers. And so the spreads are going to be higher, and so the prices are going to move even faster. So that's why when you have like those cryptocurrencies that are far down on the chart, they might be like the 110th cryptocurrency. They only have like a $1 billion market cap, and their trading volume every day might be $100,000, compared to like Bitcoin that's trading billions of dollars of volume every day. That means that there's like 10 to 100 times less offers and bids, meaning that the bids and offers could be farther apart, so that the last price could be jumping all over the place, meaning that price of that asset is going to be way more volatile because there's less people involved. You see what I'm saying? Whereas if there's every person in the world is buying Bitcoin, then you can be sure that if you put in an offer, there's probably going to be someone there to scoop it up. So like, when do you know when to get in? The question is more so, how long are you trying to stay in? That's the way you should be asking yourself, you know? And if you're thinking about it very long term, the question isn't when to get in. The question is, how much do you think this is worth? What is the terminal value? What is the value of this when I'm going to need it? If it's for retirement, 20, 30, 40 years from now, what's the value of the asset then compared to now? Not last month, because it's not a loss until you cash out. You feel me? So like, what's it worth when you're going to need it? Track that back to today. If you think that it has opportunity to 10x over 10 years, then a $100 asset today is actually worth $1,000. And if it's trading at under $1,000, it may be worth allocating. Do you put 100% of your money in it? No, because we're never ever going to be guaranteed to be right. But you got to look at present value versus terminal value, and that's how you decide what should I do.
Yeah, I feel like a lot of people don't even talk about like how much of the asset do you own. Because I feel like it's easy to look at like, okay, like last year I put $1,000 in on Bitcoin. I bought at the all-time high because my grandma told me to buy in, and
Oh,
now
grandma put you on Bitcoin?
grandma put me on the Bitcoin, fam.
Hey, word.
She's plugged into the DGen network, yo. I'm pretty sure she's in New School DGen Discord. So if you want to talk to Granny, she's
Shout
joined the
out
Discord,
Granny.
yo.
She's a G. Drop a like for Granny.
Girl talk, girl talk. So I just feel like when you put in, let's say you put $1,000, let's say you bought it at the all-time high, I think, and in Canadian dollars, it was trading at like 70K, 80K, or whatever. And now it's like half of that. It's like trading less than 40K in Canadian dollars. I think that this probably is a good time if you're thinking long term to actually like look at how much of the like, if let's say it's BTC, how much BTC you actually have. Because like I know there's a concept that I can't remember who was talking about it, but he was saying like averaging down, like averaging your costs down. So if you were buying at an all-time high, like this is a good time to average down. So instead of having like average buy price at like 70K, you can bring that down to 50K or halfway in between. And I feel like that the same thing applies in like stocks, right? Could you jump into that a little bit more, Courtney?
Absolutely. And I mean, that's just when you look at the averaging down is related to when you look at your portfolio and it shows the total value of what you have. You might have bought it at many different times. That's just all of those prices combined and averaged. And if you're buying below that average, then you're basically over time reducing what the basis that you're starting at is. That's what you're saying. So it's an important thing and it's a great thing to do. If it's an asset that you believe in, like I said, you got to always reassess. Like you might one day look and be like, I no longer believe in this because of X, Y, Z reason. And that's like a mature thing to do. You know what I'm saying? To like not think about the sunk cost of how much time and money you've already had into something. And if it went down already, looking at it as if this was day one and this was fresh capital, do I still believe in this? If the answer is yes, then yeah, you can average down. But here's another concept that I'm going to kind of put out there. If you had $1,000 and $1,000 5x, does it change your life? No. Right. If you had $100,000 and it 5x, could that potentially change your quality of life, at least for a while? I'd argue, yeah, it could. So here's my thing. In the beginning of your investing career, meaning the first few years, like the first decade, or probably up to you reach a point where like you have more than a year's worth of earnings in your investments, right? Obviously, you don't want to just swing for the fences on every single thing you do, but the amount of contributions you make is more important than the timing of those contributions early on. Because if you make 50K a year, for example, and you invest $1,000 and it goes to zero, like that's like it hurts, but that's 2% of your net worth or 2% of what you're going to make in a year. You know what I'm saying? So you can make that back again. But if you add that to make a grand, invest 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 a grand, eventually you'll have 10 grand. And then the 10 grand could represent 20% of what you make in a year. And then if that 5x is, then you can have a whole year's worth of money. So early on, don't focus on timing as much as you focus on the contributions you make. Obviously, the first step is don't pick stupid things to put your money in. If you buy 100% of your investing is in JPEGs, and there's no buyer on the other end of those because those are very illiquid markets, and there's only 10,000 people who care about your stupid ass penguin anyway, then I'm sorry. That was your mistake. You should have only put a smaller amount of money in that if that was all the money that you had.
JB looks triggered right now.
I'm sorry,
man, because that stuff's going crazy right now in the NFT space.
Right, but that's why you gotta, to Jimmy's point, like you gotta put in an amount that it's there for a purpose, right? You don't put your 100% of your money in something that potentially you couldn't get out. But I do think that early on, instead of focusing on the exact precise timing, just dollar cost average, get in there, average down, buy in a regular, and make the contributions. You know what I'm saying? You don't have to be perfect because you could 10x on $1,000 and you're still working. You're still waking up on Monday and going to work. You know what I'm saying? If you 10x on 100 grand, that's a whole different story because
YouTube channel.
You feel me?
Nice to me.
You feel me? Then you have flexibility. You have options. You could buy yourself 8 months where you don't have to go into work to get something up off the ground. So like work on those contributions more than the timing.
Yeah, no, that's some facts. And also like if you're investing in a coin, if you're investing in a stock, if you're investing in a JPEG, and you think that the price is going to keep going up, and not expect to go through times like what we're going through now. Granted, things have dropped a lot, and we've seen it kind of go up and down, up and down. We haven't seen it go down like this in a while. But like that comes with the game. You know what I mean? Like you're in it. Like if things kept going up, that would be so unrealistic. So we just gotta ride that wave. And Courtney talks about conviction a lot. If you have the conviction, these things shouldn't really worry you unless you have Luna.
Lee, uppercut.
I'm gonna be honest. I had some Luna, but you know why I can laugh? Is because it wasn't my whole entire life savings. You feel me? I wasn't leveraged long to the point where if it dropped by a certain amount, they were going to margin call me and take my collateral, right? And definitely not telling anybody how to invest their money, but I look at it like this. I have like a retirement plan from my employer that's a certain set of money that's over here, and it's like invested uber conservatively, right? Then I have like a tax-free savings account that's invested in like equities markets, in like index ETFs, relatively conservatively, you know what I'm saying? And then I have what I have in crypto, which is relative to those other ones, it's not the same size. I'll just put it like that. You know what I'm saying? And then inside that crypto one, there was a little bit of Luna relative. I say a little bit, like to somebody it might be more, to myself relative to everything that I own in my entire life. If it went to zero, which it didn't, it was close. I got out before it went to 14 down dollars. That's sad. 88 down 81% on the week. But
that, bro, like
yeah,
it's crazy,
right?
how
But
fast that happens.
exactly. But I say that to say like, yo, position size matters, meaning the amount you invest in each asset matters. You know what I mean? It's not enough to just be very like have your heart all set in it, because people have their heart set in everything, and we only remember the people who are right. Where they're like, I knew Bitcoin was going to $100,000 from 2013. And it's like, yes, and there's also people who knew that freaking, you know, Shiba Inu was going to $1 by 2021. So like those people both had the same level of conviction, but one of them was proven right and one of them was proven wrong. You know what I'm saying? So at a certain point, like take your foot off the gas a little bit and just give yourself a little bit of room to be wrong.
I think this is a perfect time. Like you said, take your foot off the gas. This is a perfect time to actually like take in the scenery. Like go and like actually look at the projects that you invested in and like research what's going on. Like, are they developing? Are some of the teams actually coming up with new projects? Because I feel like right now, like, yeah, you could get stuck and you could look at the price and your emotions are going to go down with the price right now. So how do you feel? How do you make yourself feel better? Look at the technology. Look at what probably got you excited about the market in the first place. Like I remember before I even bought Bitcoin, actually, no, I bought Bitcoin a while ago, but before I learned about Bitcoin, bro, I was like, when I started jumping into it, I started getting so super excited. It made no sense why I didn't buy more. And so right now is that time. I feel like if you're kind of new to it, like I am, like I'm pretty new to it, while things are kind of like dying down, a lot of the influencers aren't, you know,
influencing.
Influencing. You know what I'm saying? You know, YouTube is not showing me 10x, 20x videos every week. Like this is the time to listen to a podcast like First Class Podcast where we're sharing the real. This is the time to listen to Bankless who got their YouTube channel back because they're sharing the real. Like this is the time to start looking at the actual industry from a technology standpoint and a knowledge standpoint and stop waiting for number go up, because like if you're with like the new school Degen mindset, we're here for the long run. Like people are building on platforms. People are we're talking about things that are actually going to make not only like political impacts but economic impacts in markets that some of us have never even been to. Like these are world changing things. So I feel like this is a perfect time. If you haven't read the Bitcoin Standard, go read that. Like get yourself pumped up, because like every market, like we all know crypto's here to stay. Like we know Bitcoin, at least Ethereum are here to stay. So you know like it's gonna bounce back. This is your time to like build up that conviction and start doing more research. In my personal opinion, that's what I would be doing to get myself more excited.
I love that you said that, but your conviction. Remember you said that I gave you an orange pill, but like you took it. You know what I'm saying? Like I didn't force it in your brain. You took it. You did what you wanted with it. And my man Will Clemente said, volatility, and volatility is the price action of asset, up and down, wide spreads, and just going crazy, up, down, right? That's volatility. Volatility is just a mechanism for transferring wealth from weak hands to strong hands. And so how do you develop those stronger hands? It's emotional, it's mental. And that comes from understanding the underlying and being able to recognize and see deviations in the human behavior. Like people are starting to, right now, they're reading headlines instead of reading books. They're listening to the TV instead of listening to the research that they did. You know what I'm saying? And if that's the thing that's going to drive what your decision-making process is, short term is going to drive your decision-making process, then long-term people are going, like, don't feed the whales. What do you think the whales are doing? They're sitting back, catching they got bids set like way at the bottom of the price range, and they're just waiting for people to sell into those bids, and they're catching all those discounted assets.
Right now.
Exactly, fam. So don't buy some garbage. Right now, value is on discount. The things that will endure are on discount because they're not as sexy, but they have real, to Jimmy's point, they have real futures. And I think that's where we got to focus. Like, and if you're not trying to invest in anything right now, the best thing that you could do is probably make sure that you like pay some debt down. Like, because maybe you're not going to get 20% return, 100% return, 50% return right now. But if you have a credit card that's 19.5% APY, well, if you pay that down, you're going to get 19% return, because that dollar is a dollar that you would not gain interest on and have to pay down later. You know what I'm saying? So I think a lot of people separate financial literacy from crypto, and that's like a big issue to begin with. But like, just be smart with your money. Don't put it all in one asset per se, and manage your expenditures to the point where like you don't ever become a forced seller.